Warren, how would you define true success?
Well, I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success.
Warren Edward Buffett, or simply Warren Buffett for the world, is an American business magnate, investor, and philanthropist. If you haven't heard of him, well, you've been missing out. As of October 2023, he was the seventh richest person on the planet, boasting a staggering net worth of $117 billion. But how did Warren Buffett become the investing guru we know today? It all started in his early years. Warren's fascination with business and investments ignited when he stumbled upon a book titled 1,000 Ways to Make $1,000 at the tender age of 7. His childhood was a playground for entrepreneurial ventures, selling chewing gum, Coca-Cola, and magazines door to door, helping out at his grandfather's grocery store, and even delivering newspapers. In fact, on his first tax return in 1944, he deducted $35 million for the use of his bicycle and watch on his Paber route. And speaking of ventures, in 1945, as a high school sophomore, Warren and a friend invested $25 to purchase a used pinball machine. They placed it in the local barber shop, and within months, they were the proud owners of several pinball machines across 3 different barber shops in Omaha. This entrepreneurial spirit was the spark that ignited his journey towards becoming a financial wizard. They eventually sold the business for a cool $1,200. Not bad for a couple of high school students, right? Warren's father, Howard Buffett, recognized his son's budding interest in the stock market and investing. In a heartwarming gesture, he fostered young Warren's curiosity by taking him to visit the New York Stock Exchange when he was just 10 years old. Now, that's some top-tier parenting, introducing your child to the world of investments at such an early age. At the tender age of 11, he purchased 3 shares of City Service Preferred for himself and 3 for his sister, Doris, who would also go on to become a philanthropist. By the time he reached 15, Warren was raking in more than $175 every month, delivering Washington Post newspapers. In high school, he even invested in a business owned by his father and bought a 40-acre farm worked by a tenant farmer. Yes, you heard it right. He bought the land at the age of 14 with his $1,200 in savings. Fast forward to his college days, and Warren had amassed a cool $9,800 in savings by the time he graduated. That's roughly equivalent to $121,000 today. The lesson here: Warren Buffett was a financial wizard from a very young age, and he knew how to make every penny count. Now, you might be wondering, what exactly is Warren Buffett's secret sauce for amassing such wealth? Well, Mary Buffett, who was married to Warren's son Peter for 12 years, and her co-author David Clark have put together some Buffett-esque wisdom in their book, The Tao of Buffett. This book includes 125 quotes straight from the Oracle of Omaha himself, along with brief explanations. While these quotes might not guarantee you a spot in the Billionaires Club, they do offer some valuable insights. Buffett's golden rule, which he repeats like a mantra, is simple but powerful. Rule number 1, never lose money. Rule number 2, never forget rule number 1. It's like his North Star, guiding him through the turbulent seas of finance. It sounds like common sense, but it's a principle that has earned him billions. Another gem from Warren's treasure chest of wisdom is the power of compound returns. He understands that the more money you have to begin with, the more it will compound. So, when you're young, taking big risks with your money might not be the best strategy. It's all about steady, consistent growth rather than swinging for the fences. Here's where Warren Buffett's wisdom shines through. He doesn't try to leap over 7-foot bars. He looks around for 1-foot bars that he can effortlessly step over. Warren isn't aiming for the stars. He's not trying to hit home runs with every investment. Instead, he patiently waits for the perfect pitch, the sure thing. He invests in companies with business plans he understands and products that won't go out of style. It's about playing the long game. Warren Buffett is no follower. He's a maverick. He doesn't seek affirmation from others. He prefers to go against the herd. Many of his most successful investments were made when nobody else wanted them. Companies like General Foods, RJR Tobacco, GECO, and American Express. He saw potential where others saw uncertainty. Warren's investment philosophy is straightforward but effective. He suggests investing in businesses that even a fool can run because someday a fool might be running it. It's about choosing businesses with strong underlying economics that are hard to damage. That's the key to long-term success in the world of investing. Warren Buffett's investment philosophy revolves around a simple yet profound concept. Invest in what you understand. It's a mantra that has guided him throughout his career and played a pivotal role in his success. So, what does this mean for you as an investor? Buffett believes that you should only put your hard-earned money into businesses or assets that you thoroughly understand. This doesn't mean you need to be an expert in every field, but it does mean you should have a clear grasp of how a company operates, generates revenue, and sustains profitability. If you can't explain the business model to a friend in simple terms, it might not be the right investment for you. By adhering to this principle, Buffett avoids making rash decisions and steers clear of the allure of trendy, high-risk investments that he doesn't comprehend. He's often quoted as saying, "Risk comes from not knowing what you're doing." So, before you put your money on the line, take a page from Warren's book and make sure you truly understand the investment. Warren Buffett is the epitome of the phrase, "Patience is a virtue." He's well known for his long-term investment horizon, and it's a key component of his enduring success. But what can we learn from his unwavering patience? Buffett's approach to investing involves buying quality assets and holding on to them for the long haul. He's fond of saying that the ideal holding period for an investment is forever. This doesn't mean you should never sell, but rather you should have a compelling reason to do so. In a world driven by short-term gains and instant gratification, Buffett's patience is a breath of fresh air. He believes that time is an ally to the patient investor. By holding on to your investments and allowing them to grow over time, you benefit from the power of compound returns. So, the lesson here is clear. Don't be swayed by the daily ups and downs of the market. Stay focused on your long-term goals, and remember that time can be your greatest asset in the world of investing. Warren Buffett is all about playing it safe, and one of his fundamental principles is the concept of the margin of safety. This is the buffer zone he creates to protect his investments from unforeseen challenges or downturns. The margin of safety is essentially the difference between the intrinsic value of an investment, what it's truly worth, and the market price. By buying assets when they are significantly undervalued, Buffett ensures that even if the market takes a hit, he's not at substantial risk of losing his capital. For individual investors, the lesson is clear. Before investing, do your homework and assess the intrinsic value of the asset. Make sure you're buying it at a price significantly below its true worth. This way, you're creating your margin of safety, just like Warren Buffett does. Warren Buffett has a knack for going against the crowd. He's a contrarian investor who isn't afraid to take a different path from the masses. This approach has been a key driver of his success. Contrarian thinking means that when everyone is fearful, you should be greedy, and when everyone is greedy, you should be fearful. In other words, when the market is in a frenzy of buying, it might be a good time to sell, and when everyone is selling in a panic, it could be a great opportunity to buy. Warren Buffett's wisdom extends beyond the world of finance. He's known for his humility and his insatiable thirst for knowledge. He once said, "The more you learn, the more you earn." Buffett understands that the world is constantly evolving, and what worked yesterday might not work tomorrow. He's a voracious reader and has often credited much of his success to the knowledge he's gained through books and continuous learning. Remember to show your love by hitting that like button, subscribing to the channel, and staying tuned for more.